The broadcast is now starting. All attendees are in listen-only mode.
Good morning, friends. Welcome to this webinar. I am Nandish Shah, Technical and Derivative Analyst, and I am joined by my colleague Nagaraj Shetti. Good morning, Nagaraj.
Hi,
Nagaraj, I am not been able to hear you.
yes, can you hear me now?
Yes, now I can hear you.
Yes, good morning, Nandish. Good morning, everyone. Welcome to Fortnightly Market Outlook webinar.
Okay, so today in the webinar, first we will discuss how the global markets have fared during last 1 month. Then my colleague Nagaraj will share his technical view on the market, our Indian markets and global markets. I will share my derivative view on our Indian markets, and then we will open the session for the question answer. So to begin with, let me first share with you how the global markets have fared during last 1 month. So our markets, Indian markets, have underperformed during this last 1 month, as many Asian markets and global markets are up by more than 5%, around 3 to 7%. As you can see here, our Nifty remained flat during this month, while Sensex fell by 1%. Although our mid-cap and small-cap industry did well, but basically we have underperformed the global markets during the last 1 month. Now we have broken out, we have closed that fresh all-time high on the weekly basis. So we expect a market to outperform from here on. So to discuss the view on the market, I will ask Nagaraj to share his technical view first.
Yes, Omkar. Yeah. Okay. Yeah. Can you see my chart? Can you see my PPT, Nandish? Hello.
Yes, Nagaraj. We can see your screen.
Okay. Yeah, friends. Good morning again, and we'll start with the fortnightly market outlook on the technical front. Today we are going to discuss detailed about the market, how the markets are formed on the Friday, what is the outlook for the market for the next week, how the broader markets are behaving, Nifty as per smaller time to larger time frame, and lastly I will discuss about some of the global markets, and finally we will conclude the on the technical front with the view that what will be the market outlook for the next fortnightly, for the next week as well. Without showing any, without making any delay, we will start the Nifty. Friends, this is Nifty 60-minute chart, and what we can observe over here is you can see it from the boxes that Nifty has been in a clearly a range bound action on Friday. So this box indicates the smaller candles. What we can see over here is a range bound action. Market was in a narrow range, and over the last 3-4 days of intraday charts is indicating the market is in a firmly uptrend. These higher tops and higher bottom formations are suggesting that market is likely to move up. Though market placed at a higher levels, still there is no confirmation of any reversal pattern. This range bound action, whenever the market is in uptrend, as per the intraday, this range bound action indicates that we are likely to see upside breakout of this range. Now let's discuss how the daily time. This is a daily time frame chart. Daily time frame, we are in a broader range market, broader range movement over the last few weeks. We have seen Nifty taking support around 21,250, 300 levels, and placed at the strong resistance around 26,100, 125 levels. We have seen a couple of indications, Nifty hitting the all-time highs around 22, 125, 126 levels. And recently, what important is Nifty formed a higher bottom around 21,500, 430, 500 odd levels. Nifty, 530 odd levels. Nifty had formed a higher bottom, and again moving towards the new all-time highs. The what daily time frame chart is indicating, we are at the resistance. Resistance is very strong, no doubt about that. 22,125, 22,150 is going to be a strong resistance. And at the lower levels, we are finding a higher bottoms. Technically, whenever such pattern forms higher bottoms, and when the repeatedly Nifty tests the upper trajectory, upper resistance, that itself indicates that eventually that resistance is going to be broken on the upper side. So on the daily time frame, we have formed a higher bottom around 21,530 odd levels, and we are moving up. And this up move currently placed around 22,030 levels. I am expecting this up move to reach towards the 22,120, 122, 130, 150 levels, and eventually after some consolidation, we are going to see the upside a breakout of this range. Friends, this is the weekly time frame. This box is itself is indicating on the weekly closing front. In the weekly close, we have closed at the higher levels compared to last 4-5 weeks, or you can say 1.5 months of time. We have closed at the higher levels. This weekly chart, this indicates this moving average suggests that we are in the strong support of the 10-week EMA. 10-week EMA has been in a strong support in during particularly in previous time 1 or 2 times this. Moving average support has been broken on the lower side. Eventually, immediately after the downside breakout, this downside breakout has turned out to be a fast downside breakout, and the index has bounced back. So during this time, index has bounced back from the lower levels, though index has slipped below the support and eventually moved up. Currently taking support at this 10-week EMA around 24,500 levels. This week also Nifty has taken support at 10-week EMA around 21,500 and moved up. This is indicating that we are likely to move up, though there is a consolidation pattern, consolidation, a range bound action at 22,000 to 21,500 levels, and we are likely to see eventually Nifty could move above the 125 to 150 levels. So as per weekly, though Nifty placed at the higher levels, still there is no indication of any reversal pattern unfolding at the higher levels, which is very important as of now. Now we'll go to the long-term charts. Let's see what the monthly. See, this is the monthly chart. This you can see the trend line breakout. Couple of months back in the last month, we have seen a significant upside breakout of the trend line resistance. In the month of January, we have consolidated. This doji pattern, friends, we can say this doji pattern itself is indicating that Nifty is showing some consolidation. That means there is a possibility of some consolidation at the higher levels. This is what exactly going on since last month. Nifty is finding resistance around 21,200, 21,125, 126 levels, formed a higher tops and consolidating. This doji, once it broken about the high of the doji, on technically we believe 22,126 gets broken on the higher side, then we are likely to see a big upside as per the longer term chart. See, the longer term chart is still intact. Bank Nifty, friends, Bank Nifty was a little bit underperformer compared to the benchmark Nifty recently. What is the long-term charts of Bank Nifty showing? Bank Nifty is placed at the support. This is a strong trend line support, and last 2 weeks we can see the long lower shadows, and the Bank Nifty is placed at the resistance of 46,400 odd level. Whenever we believe that whenever the indices are taking supports at the higher levels, lower levels, lower strong supports, forming a long lower shadows, forming a higher bottom kind of a thing over the last 2-3 weeks, and repeatedly test the resistance of 46,400, 500 levels, that itself makes that this market is preparing, this index is preparing for an upside breakout. Last 3 weeks, we have been continuously seen 46,400, 46,500 is being tested on the Bank Nifty, which is a strong set of resistance. And eventually, I believe this resistance is going to be taken after a small consolidation. There may be a consolidation in the next week. Bank Nifty is showing some sign of minor weakness at the higher levels right now from 46,700 odd levels. But eventually, after this consolidation, we are likely to see Bank Nifty zooming above 46,400, 500 levels. Then we are going to see a big higher levels in the banking sector as well. So mid cap, friends, we all know the mid cap, what has happened in the mid cap. We have seen in the last 2-3 months a dream rally in the mid cap. Whenever mid cap has declined, this is the marker, this is the mid cap 100 of daily chart, this is the weekly chart. In the daily chart, we have seen that arrow marks suggest whenever the 1-day drop has happened in the mid cap, eventually this mid cap has bounced back, and this has been an indicator for the benchmark. Whenever this mid cap has bounced back after 1 day or 2 days of decline, broader market and the benchmark market has also moved up. This time again, this has happened recently, that again after the formation of hammer, bullish engulfing type of pattern. Mid cap has bounced back from year levels and is currently moving towards all-time highs. Though mid cap on the weekly time frame placed at the higher levels, some doji kind of a pattern. This engulfing circles indicate the doji or a high wave type candle pattern has been formed in the last couple of sessions. Still, there is no indication of any reversal in the broader market indices. So we are likely to see some selective movement in the mid and small cap stocks, and we are going to see a further upside in the both indices. So next we'll see the small cap. Similar kind of a pattern has happened in the small cap as well. We have seen a 1 day, couple of days decline, and eventually the small cap has bounced back from the lower levels. Higher tops, higher bottom is intact. Currently, we have seen a formation of higher bottom. Again, the small cap is moving up. These are the supports as per a weekly time frame. 10-week EMA support has been continuously taken by the small cap, and recently also last week we have seen the small cap has taken the support of 10-week EMA and moved up. This is what indicating this broader market indices, small cap and mid cap, that trend is remain intact. Though we have seen the sizable correction, we are likely to see upside bounces in the mid and small cap segments. So friends, that is one thing is clear from here, that selective big buzz moment in selective mid and small cap movement is likely to continue. Still, there is no kind of any reversal. So friends, we will see some of the global market. Nandish has discussed about the global market. We can see some of the global markets. Dow Jones, this is the weekly chart of Dow Jones. Last 2-3 months, you have seen a vertical type of a move. We can see this long bull candles and small consolidations. Again, bull candles for 3-4 weeks. Again, small consolidation. Last week, we have seen consolidation in the global market. And again, this is showing that this is Dow Jones is taking support of this trend line support. So what this indicates is Dow Jones, though placed at the higher levels, though consolidation is going on, though smaller correction is going on from the Dow Jones at the higher levels, I'm not expecting any bigger decline in the Dow Jones. Though Dow Jones may shift into consolidation, there is a possibility of a support of this trend line, and eventually what we have seen in the past also, after this consolidation, we are likely to see upside movement in Dow Jones. Similar kind of a thing has happened in the Nasdaq as well. Nasdaq has taken a support of vertical type of ascending trend line, and we have seen some consolidation movement, minor downward correction in the Nasdaq at the higher level, around 16,000 odd levels, but at the lower levels, this global market is finding support. So though at the resistance these markets are placed at the lower levels, they are likely to find the support, and the market, this Nasdaq and Dow Jones is likely to recover and bounce back from the lower levels. Next, this is a Nikkei Japanese market. Friends, you must have seen the market buzzing in Japan. We have seen this kind of a chart pattern. What does this indicate? This was a trend continuation pattern. You have seen a bullish flag type. This Japanese market has witnessed a upside breakout of the bullish flag type pattern. Though placed at the higher level at 38,500 level, there is no indication of any signs of any reversal or a top reversal pattern. So on the global market front, we are likely to see market is moving towards the trend remains intact, and we could see these global markets moving higher. So friends, the conclusion, the way ahead is the short-term trend of Nifty is positive with range-bound action. Nifty is currently placed at all-time high. We all know that 22,125, 22,126. These are the two things that we have seen market making highs. There is a possibility of further upside in the near term. As I mentioned, again, we are going to see the 22,125, 150 levels. There is a possibility of small consolidation, and we could eventually break about 22,150, 200 levels. So initially, target is going to be around 22,200 levels, and after that, 22,500, 22,600 going to be the next target for the Nifty in the next 15 to 20 days or a 1 month, you can say. Stop loss can be placed, friends, at 21,500, which is a very strong support at this point of time. Nifty on the weekly chart formed a large range movement at 10-week EMA support. Though placed at the higher levels, still there is no indication of any reversal pattern, as I mentioned, as per the long-term charts. And Bank Nifty is placed at the hurdle of 46,500, 46,700 levels. Stop loss can be placed at 45,500 levels, friends. Bank Nifty is slightly negative. I'm not expecting any bigger decline from here. There may be some consolidation, but eventually Bank Nifty is likely to move up. And the upside target to be watched for the Bank Nifty is 47,500 levels. Small caps and mid caps are placed at the weekly 10 EMA supports. There is no sign of any reversal. Broader markets are looking positive. We are likely to see buzz in the selective mid and small cap segments in the week to come. And sectorally, banking, PSU banking, automobile, IT, pharma are expected to outperform in the short term. So this is all from the technical from as far as Nifty and global market is concerned. I would like to invite my colleague Nandish to discuss about the Nifty as per the derivative, how Nifty is placed as per the derivative. After that, we'll take some questions from the audience. And Nandish, over to you.
Yeah, thank you, Nagaraj, for the wonderful technical presentation. Is my screen visible?
Yes, it is visible, Nandish.
And am I audible, right?
Yes, you are audible.
I am audible,
You go
right?
ahead. Yes.
Okay. So friends, let's start away how the market is looking from the derivative side. I will show you how it is looking from the derivative side. So during the week, we have seen long build up in the Nifty, where we have seen open days rising by 3%, with Nifty rising by 1.919%. And this is the all-time high close for the Nifty on a weekly basis. So as I discussed earlier, during last 1 month we have underperformed, but yesterday on Friday we have closed on a very stronger note. Nifty closed at all-time on a weekly basis. So it indicates that it suggests that we might go higher from current level. However, on the bank Nifty, we haven't seen any long build-up. We have seen short covering, where we have seen 6% fall in the open days, with bank Nifty rising by 1.64%. So while we have seen long build-up in the Nifty, in the bank Nifty, we have seen short covering. Coming to option data, Nifty open days put call ratio rose to 1.22 levels from 1 levels. Thus, this indicates that put call ratio has not reached to an overbought level, though Nifty is all-time high. This in turn suggests that there is more upside left. Amongst the option, we have seen pull tightening at 22,000 levels and also 21,500 levels. This suggests that 21,500 level to act as a very strong support for the coming weeks to come. That is a major support level. And on the higher side, 22,100 to 22,200 is likely to act as an immediate resistance. Once we cross that, we might see a level of 22,500 to 600 levels. So as you can see from the option distribution chart, we have seen massive put tightening at 22,000 levels, this red bar, and after that we have seen put tightening at 21,500 levels. So this range is likely to act as a very strong support. On the upside, 22,100 is the immediate resistance. Once we cross that, we might see a level of 22,500 to 22,600 levels, where we have seen call writing. Coming to FIs data, this is important. FIs have created fresh longs in the index future. They have net bought worth rupees 1265 crore, with their open days going up by 27,000 contracts. And their long to short ratio moved up to 0.62 from 0.52 levels. This means that although FIs have created fresh long, they are still net short. As the ratio is below 1, it indicates that FIs are net short. You can see from this FIs long to short ratio chart, although it has moved up to 0.62, they are below 1, so they are net short. This ratio was around 2.28 in the month of December. From that level, they became net short. We witnessed some running correction in the Nifty, and they again turned buyer. So we begin the series with long to short ratio of 0.28. Now we have reached to 0.62. So we expect there is more room for short covering from the FI side, as FIs are still net short. Coming to sectors, as Nagaraj also discussed, many sectors like IT and pharma are looking good from the technical side. From derivative side also, we have seen clear long build-up in the IT stocks, even oil and gas and pharma. These three are the sectors in which we have seen long build-up, and these are looking good from the derivative side also. Technically also, they are well placed, as Nagaraj discussed. Coming to outlook, as I discussed, we have seen long build-up in the Nifty futures, put writing at 21,500 to 22,000 levels, long build-up by the FIs in the Nifty future segment, and FIs long to short ratio still below 1. All these indicators indicates that there is more room for upside in the Nifty. So our advice is to remain long, accumulate longs on decline. Your stop loss should be 21,500, and once we cross the immediate resistance of 22,200 levels, we expect Nifty to reach to 20,500, 600 levels. So as of now, our view is bullish. Many Nifty sectors like pharma, IT, oil and gas, they are doing well, and they are likely to outperform. I like to add the one thing: the mid cap IT stocks. After a long time, we have seen clear breakouts in the many mid IT stocks. So I think they can also do well. They have underperformed for the long time. Now they can do well. That's our view. Coming to Bank Nifty is not as strong as Nifty, as I discussed earlier. So in Bank Nifty, our view is to buy on declines, keep a stop loss of 45,500 levels. It's better to buy on decline rather than current levels. On the higher side, once we cross the level of 46,500, 46,700, which is a resistance area, we might see a sharp upside. Then we may see a level of 47,500. But as of now, our view is that Nifty is more strongly placed, while Bank Nifty, you can create aggressive longs above 46,700. That is all I want to share from the derivative side. Now, if you have any question, you can ask us. We are more than happy to answer.
Thank you, Nandish. Before audience ask questions, I have one question in my mind. Even others might be interested to listen. Nandish, tell me on the derivative front, is there any sectors that are looking very positive, or some buildup is going to happen in any sectors as per derivative indicators?
So yes, Nagaraj, there are a couple of sectors. First of all, as I discussed, IT sector. We have seen that large cap ITs have underperformed during the last 1 year, but it seems that from the derivative data that sector, particularly IT, is likely to outperform from here on. We might, apart from the large cap IT stocks, many mid cap IT stocks also, they are looking good on the charts. Couple of them we have recommended also. You have recommended NIIT, I have recommended Sasken. So mid cap ITs are also there. We have seen some traction and they are likely to do well. Apart from the IT sector, few auto stocks like M&M, Maruti, Tata Motor, they are also well placed from the derivative side, so they are looking good. And also pharma stocks like Aurobindo, Dr. Reddy Lupin, they are also looking good from the derivative side. So pharma, IT, oil and gas, and couple of auto stocks, these are looking good from the derivative side.
Okay, still we have no questions from the audience side. I request everyone, if anyone has any questions regarding the sectors and the market, please post your questions over here. We are happy to answer for your questions. Nandish, by the meantime, do you have any the questions have started to come. Dinesh is asking Gensar Tech view, please. Sorry, Mr. Dinesh, we are not going to take the questions about the particular stocks. What about PSU stocks? Anand is asking, what about PSU stock? PSU stocks are looking positive. We have seen a good rally in PSU sectors, and recently we have seen some decent correction, downward correction. After the downward corrections, PSU stocks have made PSU sector has made a higher bottom, and it is moving up. So I mean, PSU stocks have become a buy and dips opportunity and currently moving up, looking positive for the PSU. And one more gentleman, OMC stocks outlook, oil marketing companies. Yes, oil marketing company stocks are looking positive currently. After the downward correction, they are continuously moving up. You can, I think, look for longs in oil marketing stocks or energy sectors. How about railway and public sector bank? Nandish, do you have any insight about the railway and public sector bank going to do in the next week as they have significantly corrected? Mr. Subbarao is asking.
Yes, so view on the PSU banks remains positive. Even if you see from the derivative side, there are few stocks are there in the derivative also. Bank of Baroda, Canara Bank, PNB, SBI, they are looking good from the derivative side. Technically also, after some minor correction, they have started bouncing back. So our view on that, my view on the PSU banks is highly positive. Even if you see a running correction, that would be considered as a buying opportunity. And for the medium term point of view, I think PSU banks can do well from here on.
Okay, and Mr. Bala is asking a new IPO prospectus, especially SME ones. I would request Mr. Bala to send a mail to us. We will happy to answer you on that mail with the details. So we'll take next. Ram Ahuja is asking what about auto stocks. Technically, auto sector is looking positive. We have seen some good attraction building up on auto stack like M&M and a few days back Tata Motors. And I think automobile sector is looking positive, and frontline auto stocks are likely to move further. And SBI is Jiten is asking SBI. We are not going to take stock specific. Metal stocks outlook. Nandish, do you have any insight on the metal stocks as per a derivative or a technical concept? Recently, it has made a,
Yes.
a bounce back, yeah, from the high low. Yes.
Yes, so few metal stocks like National Aluminium, in that we have seen long build up. Even Coal India has also we have seen long build up. So from purely from the derivative side, these two stocks are looking good. Apart from that, regarding metal sector, also our primary trend, our overall view remains positive. Yes, we have witnessed some correction on back of some weakness in result, and also as they have run up sharply. But I think in lower levels, metal stocks will also find some supports. Uh, on a long term basis, on a long term chart basis, they are looking good. So any sharp fall from here on in the metal sector, I think it's a buying opportunity. And for a short term derivative side, Coal India and Nalco, these two are looking good from derivative side.
Yes. Yes, thank you, Nandish. And Bhanu Tej is asking, what is the view on energy sector? Energy sector is looking positive, led by the Reliance Industries. We have seen good momentum in the Reliance Industries recently. I think we are likely to see some more upside in the energy sector. And Mr. Krishna is asking, sir, it's a time to book profit in the existing position on the portfolio and want the downside. Mr. Krishna, as we have discussed in the Nifty technicals, as well as Nandish discussed about the derivative on the Nifty, though Nifty has placed at the higher level, still there is no indication of any reversal pattern building up at the higher levels. Broader market indices are looking positive. We are likely to see some more traction on the upside in the selective mid and small cap segments, though not to worry about that. On every positions, I would advise you to keep a strict stop loss as clients, to keep a strict stop loss on every positions, and you continue. Still, there is no sign of any reversal. We are likely to see upside momentum in the market as well. And some can fresh buying in stocks done till election? Yes, Kushbu is asking. Yes, market is continue to move up, and selective mid and small caps are likely to outperform. We can continue with the good stock selections. We are issuing so many MTF picks, short-term recommendation. You can utilize that, place a strict stop loss. And can the fresh buying in stocks be done in election? Yes, that is, I discussed investment in internet-based business stocks. Investment internet-based, as Nandish mentioned, the mid-cap ITs are looking positive, and these IT stocks are continue to move up further. You can continue with the stock selective in the mid-cap ITs. It's Jagrati is asking, it's a good time to invest in lump sum in mutual fund. Yes, we have a separate department in the mutual fund. I would advise Jagrati to send us a mail regarding your query. We'll happy to answer your query in time. And Sagar is asking, what will be the Nifty movement till the Lok Sabha elections? I'm not going to tell about the Lok Sabha elections. It's quite 3 months, but I tell you the long term and the medium term charts are still positive. As I mentioned, as I discussed, we are likely to see some consolidation at the higher levels, at the 21,200 odd levels. There is a small resistance is placed, and eventually we could see the Nifty breaking above the 22,200, 150 levels, and we could see the upside target of around 22,500, 600 level, as we mentioned in the webinar. That is going to be the, you can see that is going to be the target till the election comes. And investment in small cap, Jiten is asking, investment in small cap IT stocks. Yes, looking positive. IT sector itself is positive. You can continue to invest. And consumer electricals, Nandish, do you have any view on the consumer electrics? It's moving positive, continuously moving up.
So very few stocks are there in that sector, but overall view remains positive. Yes, a few of them have corrected on back of weak results, but basically our view on that sector is buy on decline. But for a view on the particular stocks, you can call us anytime, and I can share you a technical view on that particular stock.
Yes, and Pradeep is asking Polycab. We are not going to answer the individual. We are not going to take the individual questions. We'll go to the next. Sandeep Kadam is asking, what is the outlook of FMCG? Will they continue to underperform? Yes, chartically FMCG is not that great recently. We have seen some good amount of correction, but though it is placed at the higher level, still there is no indication of any reversal on the upper side. So wait for some more time for FMCG. Some leading FMCG candidates are showing still decline. I would I would advise to wait and watch for FMCG for a reversal. Once it reversal happens, we will inform you in the right platform and we can create a long positions. Shipping stocks outlook, Nandish, I think shipping stocks are in a consolidation. They are trying to make upside moment. Do you have any outlook on the derivative front and shipping stocks? Rohit
So
Pal is
no major
asking.
shipping stocks are there in FNO, but technically speaking, GE Shipping and Shipping Corp, these two are better placed for a long-term chart. So if any sharp correction were to come in that stock, I think it would be a buying opportunity. So in the shipping stock, GE Shipping and SCI, these two are looking good from the technical point of view.
Okay. Okay, friends, we have taken enough questions. And Nandish, over to you for a final remark.
Yes, friends. So view on the market remains positive. 21,500 is a positional support. Unless we close it below that, our view remains positive. As of now, we believe that Nifty is likely to outperform because IT, pharma, and oil and gas, these are three main sectors of Nifty, and they are looking good as compared to Nifty stock, as compared to Bank Nifty stock. So remain bullish, keep a stop loss, and follow our recommendation. We will continue to come out with the many MTM recommendations. So our advice is to follow the recommendation, and for indices, keep a stop loss of 21,500. And thank you all for the joining.
Yes, Nandish. Thank you. Yes, thank you, everyone. We'll close the webinar.